Welcome to day 5 of the Wall Street Crossover Show. Myself and Darren Sinden, market commentator at Admiral Markets, have been here for 5 days. It's flown this week, young Darren.
Certainly hasn't.
Much feedback. Feedback I've had has been very positive so far.
Much the same story from our end as well. People like the show, think it's timed at
the right time.
Exactly, and got the right content. But as we've said before, if anyone's got any suggestions, any thinks we can do something a bit better, then just let us know, please.
Well, just because we're old and grey, we're happy to change, aren't we?
Certainly.
Although we're a little bit slower at changing as we get older. Okay, so if you're watching for the first time, we basically go through 5 segments. Okay, what's happening in Europe, then into Wall Street. And as said, okay, if you've got any ideas, any thoughts, we might even have the occasional guest on if somebody wrote us a nice email.
Perhaps, yeah.
Right, let's kick off then, as we always do. Data released over the European session this morning. What's caught your attention in the markets this morning, Darren?
Okay, well, another one of these German sentiment surveys has come out today. This time it's the IFO Business Climate Index and the Current Conditions Index. Both were positive.
So both were beats.
They were, and they were also better than the prior month as well, which is also good. So net both forward-looking, the Business Climate Index and the current conditions, what people think of the market of the German economy right now, both were better, and that's yet another positive economic surprise for the Eurozone and for Germany in particular. And it probably takes the sting out of the mixed ZEW numbers that we had earlier in the week. Okay. And then closer to home, we had some stats about UK property today. Now, house prices, as we said, seem to be cooling earlier in the week. However, rental prices for UK property are rising, and they rose by 2.1% in March year over year. And London up 3.2%. Now, when we think about inflation at 0% here in the UK, it's interesting to see that those are still
a bit of inflation there.
Potentially, and something for the government maybe.
It sounds like a pairs trade. Sell your property to buy the rental.
Maybe, yeah, maybe if you're in that fortunate position. Of course, in the background as well, the Eurogroup meeting in Riga, and the Greek issue rumbles on. It's a bit of deja vu there, because if you look at the comments that are coming out from the meeting, it just sounds like exactly what they said last time round. So don't expect.
I'm sure we'll have that on the slide next Friday. Sure. Okay, so let's have a look at the FTSE 100, movers and shakers, HSBC, BAE Systems and AstraZeneca. What are the headlines here?
Well, it's the Hong Kong Shanghai Bank AGM today, and obviously lots of interest in that. But one thing they have outlined is that they are undertaking a strategic review, and they won't rule out a possible re-domiciling of the bank, so a move abroad perhaps, possibly back to Hong Kong, I guess, where they came from perhaps 20 years ago. So that's piqued the market's interest, and they're up 3%. BAE Systems, the old British aerospace, they're up 3% as well. They're considering exiting from a US IT business. They do quite a bit of work for the US government. I'm not sure it's that profitable, and they're considering giving that up, which the city seems to like. Yep. AstraZeneca, one of the world's bigger drug makers, unfortunately they're down about 2.7%. Profits fell as sales of their existing drugs fell, and the thing with all these pharma companies now is the quality of the pipeline, and that's probably the biggest concern about AstraZeneca. Have they got new drugs coming forward to replace the ones that are reaching the end of their shelf life?
Understood. Okay, so in terms of M&A, rumours and movers, anything going on this morning?
Yeah, there was an interesting deal overnight. The chairman of Google, Eric Schmidt's family office, has bought a 20% stake in one of the biggest US hedge funds, a company called DE Shaw. Sure, yeah. They manage around $36 billion, very much a rocket science firm, very much a quant-driven firm. Okay. The stake came out of, hard to believe this is still rumbling on, but the administration of Lehman Brothers,
so it's still going.
Yeah, it is. It's incredible, isn't it? And it's the second deal in this hedge fund space in under a month. What's also interesting is this comment here that there were other buyers said to be interested. So watch this space. If you're looking at the quoted hedge fund space, I suppose Man Group is one to perhaps have half an eye on the back of this kind of news.
Understand. Okay, so in terms of the US data points to keep an eye on?
Yep, durable goods orders today. 2 numbers to look at there. New orders, which we're expecting to rise by around 0.5%. After a dip in February there of minus 1.4%. And then the second number is the durable goods ex-transport. Again, a small gain, 0.3%, as against a small fall in February there of minus 0.4%. Another thing people might like to watch out for is the commitment of traders report. This comes out weekly from published by the US CFTC, the Commodity Futures Trading Commission, and it's really a summary of all the open positions and where they're sort of allocated to speculative.
So it's showing volume and open interest.
Yes, absolutely, and more to the point that we actually tries to sort of break down the individual groups of investors who've got those, not naming them, but putting them into a category.
Retail, hedges.
Exactly, that kind of thing. So it's quite interesting across all of the US futures contracts, and including the exchange traded FX. So worth a read if you've got time to have a look at that.
Understood. Okay, so let's finish off with the pre-market movers in the US and your key sort of chart points, as we call them.
Yes, indeed. So things that have caught my eye today, Dunkin' Brands, most famous for Dunkin' Donuts, they're up 2.3% pre-market, and that was after a good run yesterday. They've been nominated for inclusion into the S&P 400 index, so that's good news for them. Tracker funds likely to be buying those. Technology firm Altera going the other way, down around 2.8% pre-market. A Q1 earnings miss after hours last night, and more to the point as well, weak guidance on Q2 going forward. And a similar story for Xerox, the most famously known for their photocopiers and printers. They cut their profit outlook for the year as a whole.
Right.
They're down 3.3% on the back of that.
Okay.
So levels to watch today, and the S&P on the downside 2089, and to the upside 2110, 2115. In the Dow, 17,888 is your downside level, and the upside one to watch 18,110. Euro dollar, more emphasis on the upside than the downside today, but 107.67 is your downside level. To the upside 108.90. Aussie dollar, no real change from yesterday. 78.25 and 78.50 are the upside levels. Dollar yen, for the moment, a little bit range bound, but 120.10 and 120.30 would be interesting upside levels. And cable, 150.49 to the downside, and 151.67 is the upside level to watch.
Brilliant. Cable's going to be very interesting next 2 weeks with the general election.
A lot of focus on that, Nick.
So, okay, that wraps up day 5 with the Wall Street Crossover Show. Thanks once again to Darren Sinden, market commentator of Admiral Markets and indeed the sponsor of the show.
Thank you very much, Nick.
Thank you for your commitment this week. Right, that wraps us up today. Have an excellent weekend, and we'll see you bright and breezy for this part of the show, 1 o'clock on Monday. Thank you, Darren.